So today I want to talk about something that is extremely important. It has to do with whole life insurance and where people are frequently taken advantage of. We're going to look at a case study throughout this video at the end of it with some actual numbers that will really provide some transparency around this entire video. But when it comes to whole life insurance, very often people purchase policies primarily for the cash value. Why people often work with us is that they are interested in high cash value life insurance policies. They want maximum cash value. But often what happens is one gets into a policy, this is not with us, but they get into a policy and then find out after the fact it could have been designed differently. Different setup with more cash value, less death benefit, whatever it might be. And the question that comes up is why? And then people see and hear stories about people just getting ripped off with whole life insurance, and they think, I don't want to be taken advantage of. So I need to do more research, or I've just heard too many bad things, so I'm not going to do it at all. You ever feel like that? I think everyone's felt like that with different products and services that exist. So the key here is building awareness. How do I have enough awareness around a product or service? In this topic, in this video, we're going to talk about whole life insurance, specifically designed for cash value, and really where commissions come into play and people get hurt from a monetary standpoint. A lot of times they don't even know it. So how do I build the awareness? Well, what we see where people are taken advantage of is often because of the following reasons. They don't have awareness. They do not know what questions to ask. Perhaps emotions are involved. They feel obligated to the agent, or they take the agent or advisor's word for whatever it is that's being sold to them. If an advisor states this is the best option that is available for you, they may seem trustworthy and the person moves forward with them, only to find out after the fact it was not the best option. Sometimes the advisor knows about it, sometimes they do not. Maybe they're inexperienced. That happens with any business. But this is very important here, and these are specific cases where people are taken advantage of. Quick story. Many years ago, I was working with someone out in California, very nice woman, looked at different policy options, and she sent me a note. She said, hey, I really like you. I'd like to move forward with you, but someone came to my house in the business, and it turns out I know him from so long ago. And I went over everything with him, and he said he has the best option. He put it together for me. I said, hey, no problem at all. I fully respect that. If I'm in the same position, like I get it, no hard feelings. I'll always keep in touch. If you'd like me to look at the policies, I can, but it's up to you. She sent them, somewhat to my surprise. I looked at them, and it was with companies we had looked at. I'm like, wait a minute, this is way off. These are set up for a high commission. It's not in her best interest. So I quickly sent her back those options she was sent, along with what I had put together originally, side by side, so it was transparent for her, because this can be confusing sometimes. And she looked at it and she goes, wait a minute, what is going on here? She didn't work with the individual. And why she was upset is because when she talked to him, she specifically asked, she said, is this the best option when it comes to cash value? And the agent said, as far as I know, yes, everything's set up for maximum cash value. And it wasn't. And the agent is extremely experienced. He's been in business for a long time. It's like, you know what's going on there. But did she feel somewhat obligated to him originally? You could argue that because she had that past relationship. And now she's in that pickle, that situation where, now I gotta go confront him on something. That's hard for people to do. Some other things that occur where people do not have the awareness and are taken advantage of in that respect is misinformation. Have you ever heard the term that you pay the interest on policy loans to yourself? That's not the case. If I take a loan from a life insurance policy, when interest is due, it goes to the insurance company. It is not paid back to myself by any means. I have a dividend rate of 6% and a loan rate of 4.5% or 5%. I have a positive spread on my money. Have you ever heard that one? You've got a policy earning a dividend of 6%, and you can borrow against it at 4.5%, that's a 1.5% spread. Like, sign me up, I put my money in there all day long. The reality of it is a dividend rate is not what I'm actually earning on a policy. That's a gross rate. The net performance might come out to 4 to 4.5%, could be 3.5%. So it could be a wash, or I could be negative. I want awareness on that so I don't find out after the fact and think, like, why would I do this? It doesn't make sense. The numbers have to be disclosed. It has to be transparent. Company selection, it doesn't matter. I'm like, I've heard this one a million times. I'm like, it absolutely matters. When we work with banks, corporations, the 1%, company selection is important and they don't mess around. 4 major mutual companies have delivered. We've seen that. What I've also seen is those 4 major mutuals, when you look at the net compensation rates, they pay among the least in the industry as far as upfront commissions concerned. I was talking to someone who has a lot of industry experience. I've got a ton of respect for this guy. And he said, Steve, when it comes to commission, what I've noticed in all my years in the business is people respond to it. If one company is going to pay a higher rate and on paper they produce the same, similar, or better cash values, guys and girls will sell that because they believe it. And it's an easy excuse to say, let me sell this option because it's delivering the consumer the same and I get paid double. But when you know, or if you have the knowledge to know the reality of it, that illustration isn't going to pan out and some companies always have delivered where others haven't, that's where I look at it. And it's like, man, why would I not copy what big banks, wealthy individuals, corporations have done? But what happens here? Lack of awareness, not knowing what questions to ask. This occurs so much that results in buyer's remorse or people feeling like they were taken advantage of. How to find out if something is being hidden. So, number 1, ask questions. Compare options, different agents, different products, different companies. Okay to do that. And that could be through video research. Maybe you've really done your research. Maybe you've really done your homework, I should say. Or perhaps you've seen a dozen quotes from different agents and advisors. Maybe you only need to see 1 or 2. Whatever it might be, as much research as you need to do, that is perfectly fine. It's okay to ask these 3 things. Policy design, is the policy designed for maximum cash value? Is that premium truly minimized? And when you ask that question, is the base premium minimized? What that has a direct impact on is the agent commission. No matter how you spin it, base premium dollars have a direct relationship to commissions. And it's okay to ask about commissions. Anytime someone asks, we show them. We're trying to put a system together that doesn't make it too complicated, that easily shows everyone the gross compensation paid on different companies and products. That way it's transparent in that respect. But commissions, you can ask how much someone is making on that deal. I have no problem with an agent making money. I've got no issue with that. But what I do have an issue with is if you are buying a policy and your goal is maximum cash value, and I sell you something different, I put you in a policy, make you believe like it's a maximum cash value policy, but it's not, in order for me to generate a higher commission, that's where, no, that's not right. You should not do that kind of stuff. Company selection, we already talked about that. Hire a fee-only advisor. This is something you can do, hiring someone that's not in the business or does not sell life insurance. They do not generate commissions. There's 2 of them I know. There's a lot of them out there. There's 2 of them I know that we have zero financial relationship to, by the way. We never have. One is the actuary that I admire. He's got a lot of knowledge, Scott Witt. He's a fee-only insurance advisor that specializes in maximum cash value policies. The other is Elizabeth Morgan. She is fantastic, her and her entire firm. They are domestic and international tax attorneys from an estate and business planning, sharpest people I know. I've hired them personally, but we've got no financial relationship, no kickbacks, no referrals, nothing like that. My point though, is that both of those individuals, those firms, know what to look for when it comes to high cash value life insurance policies. They know what it should look like, what the ultra wealthy do, how products perform, and they're not motivated to sell you a policy. They'll work with whatever agent you are working with. It doesn't just get kicked back to me and my company. If you're working with us, we always make referrals and introductions to them because I trust them. That's really why. Here's some things to look out for. If you're asking questions, you want to compare options, you ask about any of this. If someone gets very defensive, very emotional with you, There's lack of clarity in the responses. What is that? Is that a warning sign? I would say so. Think of it this way. If you're trying to get information on whole life insurance to know if it's maximized for cash value, and you ask me, hey, is this policy maximized for cash value? Can that premium be any lower? And I say, when we MEC test a policy, we really make sure we set the base premium at the right number. This is the best policy. Who are you talking to? You got to trust me that my options are the best. I start to get a little heated and emotional with you. Did I answer your question? When you asked me, is that base premium as low as it can go? Can the guaranteed cash values be any stronger? Can the policy be designed any better? Yes or no? Can any adjustments be made? Yes, maybe there's additional points I need to be made aware of that a MEC can potentially happen with a lower base premium, but that's stuff that we should provide as information to consumers, not get annoyed with them. That is not fair to them. This is the consumer's money going into a product. Be as clear as possible. If someone is not directly answering your questions, or they get emotional and kind of throw up a smoke screen, like think about it. If you've ever seen that stuff in any type of situation, sales or personal, what does that tell you? They don't know. Maybe they don't know how to design the policy because they're not there from an experience level standpoint yet, or they're hiding something. And usually, it's a large commission. This saying I got from Elizabeth, actually, which I admire her and her firm a lot, it has to do with throwing a rock in a pack of dogs. She said, if you throw a rock in a pack of dogs and one of them yells, that means you probably hit them with that rock. The same is true. She's directly speaking to insurance agents here. The same is true of insurance agents. If you start talking about a policy and it impacts their commissions and someone gets very emotional, starts yelling about it, you know what's going on. Like if someone's purchasing a policy for maximum cash value, then we should show them something for maximum cash value. Don't play a bunch of stinking games to try and mask the fact that you're making this big commission and then you're not transparent with them over it. So I said I was going to show an example. Let's look at an example. This was something we came up against recently, just yesterday, I believe. Yeah, so I'm shooting this video on the 20th of August. So on the left here is a proposal someone was shown with a smaller company. 1035 exchange of $560,000 and $300,000 per year paid in for 5 years. These are the non-guaranteed values. I'm going to show you the guarantees next. The break-even point between years 7 and 8, $300,000 per year, not bad from a design, and a lot of people do believe that a break-even point on a policy should fall between 7 and 8 years when you really look at the technical aspect of policy design. But look on the right. What we did first was take the exact same policy with the exact same company, exact same out-of-pocket, and designed it for minimal commission and maximum cash value. So I want to be very clear here. This is the exact same company and exact same product, with the minimum going toward premium, the maximum toward PUA. This individual is interested in cash value. Break even is now between years 4 and 5. And if we look at year 20, cash value difference, the guy on the left, almost $3.4 million. The guy on the right, $3.8 million. There's about a $450,000 difference, a little bit more than that. First year, close to, but not quite, $100,000 difference between the two. Like it's the same company, the same product. Why was the individual shown this when his goal is maximum cash value and he only wants to pay into it for 5 years? Like this, I could not justify in any way, shape, or form. Then we look at larger companies and the numbers get even more attractive, short-term and long-term. Let's look at something. So here we go. Small company on the left. Here's the actual breakdown of this policy. The $300K per year for 5 years. Base premium, $120,000. The smaller company that I have circled here in red has a commission rate of 130%. Nothing against this company. We saw the other design. That design for maximum cash value was in the client's best interest. 130% commission rate on base premium. So here's the commission, not including PUAs, because there's a compensation paid on that as well, $156,000. Like, that's huge. $150,000 plus commission on one policy sale. It's more than that with the PUA commissions. PUA commissions are small, so it might be $160 or so, but still, that's massive. And consumer value, he gets his money back beyond age 60 in a best case scenario. We're going to look at the guarantees shortly. But then we've got policy over here. So what I want to emphasize is this guy on the left, we see this very frequently, is a 40-60 split with a smaller company. The guy on the right is one of the major mutual companies, 10-90 split, minimum premium. The base premium is actually a little bit less than that $30,000. 10% of the total desired payment of $300,000 per year. What do you notice here? First, the commission rate is not 130%, it's 85%. So on the base premium, what's the compensation? $25,500. Now that is still fantastic, like that's a huge commission. But relative to the other guy, is there a difference? Yeah, right? 5 times the difference when you look at it. But taking commissions out of it, because again, I mentioned this earlier, I've got no problem with an agent making commission. What I do have a problem with is if there is a known better option, if I'm aware of it as an agent, but I don't show it for whatever reason. Like, you got to think, hey, what if I put someone in a product or a policy that's not in their best interest? They say, I want maximum cash value. I tell them, hey, you actually want this design. I think they agree with me, so I put them in that. But then they come back and question because they see this later. Hey, why didn't you put me in this, Steve? Like, what's going on here? What's the difference? I got to be missing something. Like, I couldn't sleep at night, and no one at our company here could either. Like, we don't hire people that will do that kind of stuff. Break-even point between years 3 and 4. Like, world of difference there when we look at it. Long term, 20 years into it. There's the 3.4, 3.37. Over here, you're at 4.335. Substantial difference. What's also the difference? The compensation. Now, let's look at the guaranteed values, because this is important. Because we'll often hear, hey, if you compare illustrations and such, that's not really right because dividends are different with different companies, which is true. Here's the guaranteed cash values with the proposal he received. Guaranteed values, same base. You already have the commission north of 150 grand. Where's your break even here? So I don't have it highlighted, but you can follow this column. Between years 12 and 13 with the smaller company. Meaning you've paid in $2,060,000, and at that point in time, you have $2,060,000. When his goal is to build wealth, and he likes the idea of cash value life insurance as a safe, liquid, and tax-free bucket. And he's told, oh, just think long range with this. It's like, dude, look what you're doing to the guy. Like, don't do that to his money. Versus the guy on the right, the same guy, I should say the product. These are all run at non-smoker, by the way, non-preferred policies. Guarantees here. The non-guarantees broke even between years 2 and 3. And if you've seen our design videos, why the break even so early is because there's a large 1035 exchange. But still, what do you see here? Just about year 4. 1.76 in, you've got 1.757, and you're positive year 5. Like, this is what corporations do. Minimum expenses, maximum cash value. And if you're in the business, what it requires is this type of model, a lot of volume. And I'm a firm believer in good client service. That's extremely important. So what we've done to really sustain that is continue to hire more departments. So if you're in this for the long haul, being in the business, that means you need to take this approach, and you either have to be extremely proficient and fast on your end when working with people, or you've got to be willing to take what you have just from a monetary standpoint and invest it into others. So it's a pure long-term mindset from the agent perspective because it's much less upfront and it's less long-term from a renewal standpoint, but you get more business, which ultimately allows you to grow. But like, there's the difference. And the thing is, like, why I wanted to talk about this today is we see all of this, right? The defensiveness, the emotion, lack of clarity, right? We hear stories about agents literally lecturing and yelling at their clients whenever they're questioned. I'm like, that is not right, because it's not the agent's money. This is the policyholder's money going into a policy. They want a product. They want the different options. Do what's right by them. Simple as that. This is personally why I like the fee-only advisors. I'll close with this. How I met the attorney I talk about all the time, Elizabeth, is we were working with potential clients. They work with us now, and I like them a lot, we're working with them. I get a text from the husband, hey, we want you to meet our trust attorney. She's really good, no problem. I didn't know who she was at that point in time. Have a Zoom call, and she knows this industry in and out. She helped develop a product with AIG. She's asking me questions about long-term MECs and other things that a lot of agents don't know that I've talked to. I'm like, okay, were you licensed before? And she came out, and as I look back on it, she threw the rock to see if I would bark, if I would yelp. But I'm like, no, like, here's how it works. Like, it's all good. Like, I'm on your side. I don't want to get knocked out. And she's the nicest person too, but she was defending her clients, and she had no incentive whatsoever for a policy sale, but she knows what goes on from her industry experience, so she was protecting her clients. So if you want someone that will do that for you that's not in the industry, that's where you can seek out a fee-only advisor. You can also work with us. As you know, our company, our mission statement, convenience and transparency, important to do that, and you'll grow as a company. But anyway, hope you got some value out of this video. Hopefully was able to build some awareness as far as what to look for if you're in the world of high cash value life insurance. Maybe you've talked to clients, talked with agents before, and you've experienced this. If you are an agent trying to build your practice the right way, meaning you want to work with clients who are interested in high cash value life insurance policies, you want to know how to do it right, and that's your mission, we can help you. We do have a coaching and training business. We're happy to help anyone with that mindset. So I do hope this helps. If you enjoyed it, please hit the like button, subscribe for more, and I'll talk to you soon. Hey guys, Steve Parisi here. If you enjoyed the content you just saw, please subscribe, like, and hit the notification bell for future videos. If you'd like more information or to see some custom policies for yourself, feel free to call or email our offices at the contact information below.